All right, in Chapter 12, Lesson 2, we're going to determine our payroll withholding tax and use this information for recording our payroll for our employer. Our payroll taxes are liabilities until they are paid to the respective government agency. So therefore, it is imperative that you make sure that you are preparing payroll accurately. Failure to do so could result in penalties and interest if you don't pay the correct amount to the government agencies. The government doesn't play around when it comes to getting their fair share and then some. So we have this thing called this withholding allowance. And this withholding allowance is different for each person or each taxpayer. So you, as the payroll clerk, have to figure out how much is withheld from each employee's paycheck based upon the information that they have filled out on their W-4 form when they are hired at their job. So your job is to figure out their payroll deductions, and those payroll deductions are subtracted from their gross earnings. So anything that's withheld from an employee's paycheck is called a deduction. A payroll deduction. And we have several payroll deductions. We have federal income tax, state income tax, local income tax. You have Social Security tax and Medicare tax. So there are different things that are withheld from the employee's paycheck. This is a picture of a W-4 form, and you would fill this out when you get a job. Now, it's important to know that the employee has to meet certain requirements in order to be exempt from paying income taxes. So there are criteria for that. One of them is the employee can't be claimed by someone else. If you can be claimed by someone else, you can't file as an exemption. And if your income exceeds $950, you can't claim exempt. And also, if you have some interest income in the amount over $300, you can't be exempt from paying taxes. So this is filled out when you get a job, and you should change your W-4 anytime you have a significant life event. For example, you enter into a civil union with someone else, or you have a child, or you adopt a child. Anytime you have a life-altering event, you would change your W-4. Notice it has your name, address. It also has your Social Security number, and it has your marital status, and it also has the number of allowances that you are claiming. And you can claim yourself, your spouse, and your children. And you'll sign it and date it. Now, the picture that I'm showing you right now is a tax chart that shows you how much to withhold from a paycheck. And if you look at this chart is broken down into a single person's chart, and it's semi-monthly. The other chart is married semi-monthly. So that's important to note that this is a semi-monthly pay period, meaning they will get paid twice a month or 24 paychecks per year. So your taxes differ based on how frequently you are being paid and how many dependents that you have. The more dependents you have, the less that's taken out of your paycheck for federal income taxes. We'll reference these charts when we calculate our payroll deductions. Now, it's also important to know some background information that the government agency that's responsible for collecting taxes is called the IRS, and the government agency that sets the tax laws is the IRS, and the Department of the Treasury. So these charts do change, and there are different charts based upon the different pay periods. So as a payroll clerk, you have to make sure that you are looking at the accurate information. And when you are the payroll clerk, you have to make sure that you are programming the computer with the correct amounts. So if you're calculating this based on a percentage, as you will see in some of our calculations, you have to make sure that you are consistent with your formulas in Excel. So make sure you are using the correct table and make sure you are looking at the correct amount. I always like to point out that make sure you understand that at least 1,080 is not less than 1,080. So if the amount of the total wages is 1,080, you would bump up to the at least 1,080. And then you slide over to the number of allowances. You look at their gross total earnings, and then you slide over to the number of allowances that's recorded on their W-4. And that $29 would be the amount of the federal income tax that is withheld. Remember, the taxes that are withheld are a liability until they are paid. I love teaching about this chapter at your age because it wasn't so long ago that I was your age, and I remember being taught the exact same thing. I'm 54 now, and I'm close to the age where I will collect my Social Security. I have the option to collect my Social Security at age 62 or 65 or 70. The longer I keep it in that account, the more my monthly allowance goes up. 65 is the magic number age where you can get your health care paid for. That's called Medicare tax. And if you have a job right now, you are paying into your Social Security account and you're paying into your Medicare account. You get to collect it when you're old. And it's going to happen fast. So enjoy every day. The next thing you have to understand is this concept of accumulated earnings. Every quarter or every pay period, you will accumulate your earnings until you get to the end of the year. The end of the calendar year is when your employer has to give you your W-2. That W-2 is used for you to rectify your taxes and file your tax return. So as the payroll clerk, you would also be responsible for that. The maximum amount of earnings on which a tax is calculated is called that tax base. And that tax base would be based on that concept of accumulated earnings. So it changes. Sometimes when you reach a cap, it will change. So I do want to talk a little bit about Social Security. It was enacted to make sure that you have money for when you are old. And if you're relying on Social Security and only Social Security instead of putting money into a retirement account like a 401k, if you're a public employee, or a Keogh account or a 403b, if you are a public servant, then you are absolutely insane. Or an IRA. Those are other, okay, here it is right here. Any qualified retirement plan, you must, and I repeat, you must put money in your retirement account from age 22 to 32. If you put $3,000 in your retirement account, you will have close to $1.2 million by the time you're 65. And that's only for 10 years. So if you put that amount in from 22 to 32, $3,000 a year, you will have that money saved up for your retirement. That's in addition to your Social Security and your Medicare. That's based on an average return of anywhere from 8 to 13%. And that's a return in a money market account or a stock portfolio. You must invest in a 401k or an IRA. I don't care what kind of IRA. There are advantages to this Roth IRA because it's that tax-free withholding when you, tax-free withdrawals from the account when you withdraw. These are pre-tax, meaning if you contribute to your IRA, it's deferring the tax for when you pull it out. This, you don't pay tax when you pull it out. This, you defer the tax for when you pull it out. So you would claim the income when you file your taxes when you're drawing that money out, whereas the Roth IRA, it's tax-free withdrawals from that account. Again, you must make sure that you have a qualified retirement plan. And through the power of compounding interest, that's where you want to invest at a younger age, because saving 10 years, if you invest for the first 10 years, you'll have close to $1.3 million. I'll show you the calculations a little later. Okay, so now we're going to open up our Excel spreadsheet for chapter 12, and we're doing 12-2, work together. And again, yours is going to look different than this. So I'm going to close my answers, and I'll hit save. And then I'm going to go into my folder. Oh, here it is. Et voila. Okay, so I'm going to hit File, Save As, because I had to draw out some of the answers. And so I'm going to go here, and I'm going to go to my desktop, and I need to save this as Charles Answers. And yes, I do want to save over it. So, okay, easy peasy cousin wheezy. Okay, 12-2. So 12-1, 12-1, 12-2. Okay, 12-2 work together. If you would please turn in your textbook. Oh, you know what? I did a poor job explaining this. I want to make sure you understand this. I don't think I touched upon this like I should have touched upon this, because now I'm looking at page 356. I want to explain the tax benefit and what's called a fringe benefit, okay? A fringe benefit is a benefit that your employer uses to entice you to take a job. And one of those benefits is one of these qualified retirement plans. And no matter where you work, you will have the option to put money into a retirement plan. And your employer will sometimes match how much you put into your retirement plan up to a certain percentage. Now, it varies based on your employer, but the most important thing for me to convey to you right now is if you look at that illustration that they have on page 356 in the middle of the page where it has Larry and Sandra, they both contribute $3,000. They've earned $3,000. Now, Larry on the left has medical insurance premiums and a 401k contribution. So you can see his earnings that are subjected to income taxes, because medical insurance premiums aren't subjected to income tax. So if you look, Larry has $2,600 and Sandra has $3,000. So you're looking at a 30% tax rate for federal income taxes based on Larry is based on $2,600. Sandra has no pre-tax savings, so her income tax is based on the total $3,000. So you can see that Larry is going to pay more because he did not invest in a Roth IRA. So the medical premiums, Sandra has $150 in medical premiums that she's putting into an account, and then that $250 is a Roth IRA. So that's pre-tax. So she's saving money because no, I'm sorry, I flipped that up. Larry has that 501, the 250, the 401k. Sandra has the Roth IRA. By deducting the contributions from his total earnings, and oh, okay, Larry saved $120. Both employees pay that $250 in their retirement, but you can see the one has cash available because it's pre-tax. So, oh, I hope I just didn't confuse you. Okay, sorry if I did. I'll try and make sure that I clear that up if I did. Okay, so let's try. This 12-2, we're going to work on our Excel spreadsheet for 12-2 work together. And you need to know that we are using certain percentages. So I need to read the directions and you need to follow along. I'm on page 357 in your textbook in the middle of the page. Information taken from a semi-monthly payroll is given in the working papers. Your instructor will guide you through the following examples. Determine the federal income tax that must be withheld for each employee. Use the tax withholding tables in this lesson. Those tax tables are on page 353 and 354. You just need to make sure you know their marital status. Step 2, calculate the amount of Social Security and Medicare tax that must be withheld for each employee. use a Social Security tax rate of 6.2% and a Medicare tax rate of 1.45%. None of the employees has accumulated earnings greater than the tax base. Now, this is an older textbook, so I didn't look up the tax base, but when they say that none of the employees have reached that tax base, on page 355, as of the printing in this book, if you had a maximum earning in a calendar year of $106,800, then you have reached the cap for Social Security. So the magic number is 106.8. That's $106,800. I've never made that amount of money in a year, so I pay Social Security up to the total amount. So just an FYI, I hope you make more money than me. Okay, so our first job, we have to figure out our federal income tax withholding. Let's look at John Clausen. John is married and has 2 allowances. So turn to page 354. His total earnings are $1,360. So we have to look at $1,360. Find $1,360. $1,360 is at least $1,360. $1,360. And John has 2 allowances. So $1,360 is at least $1,360, but less than $1,380. And he has 2 allowances. So if you slide over, you'll see that his federal withholding is $52. Let's look at Janice Edison. Janice is single and she has 1 allowance. So let's turn to page 353 and find Janice made $980. So that's $980. It's at least $980, but less than $1,000. Janice is single and has 1 allowance. Single 1. So her federal income tax is $79. Terry is married. Terry is married and has 3 allowances. So turn to page 354, and Terry's total earnings are $1,510. So $1,510, it's in the at least 1,500, but less than 1,520. And she has 3 allowances. So go over to the 3 allowance column, and you'll see her tax rate is $50. Susan Simpson is single, and she has 2 allowances. Her gross wages are $1,125. So $1,125. That falls in the range of $1,120 and $1,140. And she has 2 allowances. So slide over to the 2 allowance column, and you'll see that she has $77. That is her allowance. Is that the right amount for Terry Lambert? I got to make sure I didn't mess Lambert up. Is that the right amount for Terry? Terry! 15, 10. Yeah, that is right. Okay. All right. Now for our Social Security withholding. I'm going to show you the easy way to calculate your Social Security tax. I want to put the percentage here, 6.2%, and I'm going to use that percent key so you can see 6.2%. You're going to burn these amounts in your brain. Social Security is 6.2% and Medicare is 1.45%. Now, what I was referencing earlier when I was giving you the information in the lesson was you can multiply by 6.2% in Excel, or you could convert this to a decimal. It is up to you, but my perspective is Excel uses calculations, so use the percent. To figure out your Social Security withholding, we're going to put a formula. press the equal sign, take your total earnings. Now you can multiply, you could put 6.2% here, and that will calculate your Social Security tax withholding. You can do the same thing for each of them because it is always going to be 6.2%. So if you look in each of these cells, you'll see that it's referencing the total earnings times 6.2%. I always get into the habit of writing that above the column so you can reference the percentage. Burn that in. That's been the same percentage that it was when I was your age working at McDonald's. To figure out your Medicare tax, take your total earnings and then multiply that by 1.45%. And then you can fill down using the fill handle. That will insert the correct formula. And sometimes I just like to point and click to make sure that it did reference that amount. Okay, so that is 12-2. We have figured out that information. Now I want you to go and complete 12-2 on your own. Good luck.